Hello and welcome everyone to the Power of Passive Investing meetup. We're thrilled to have you all here. I actually have Matt. I don't know if Matt joined us yet. Matt Aguina. Hey, Matt.
Hey, how are you guys?
Yeah,
Sorry about
yeah, no, it's all good. It's all good. Matt is going to be helping me with the meetup. Thank you, Rafael, for all the help he provided in the past. And we're thrilled to have Matt helping us now with this meetup. And go Rutgers. Yes, Matt. Great t-shirt.
that. That's right, yeah.
Awesome. We have an amazing guest today, Emma Powell. She's the owner of operator of High Rise Group, along with her husband of 23 years, Troy Powell, acquiring 92 units in their first 18 months. They currently live in Salt Lake, Utah, after 20 years in Austin, and are parents of 6 homeschooled children aging from 22 to 8. Impressive, super impressive. She owns 2 warehouses that have been redeveloped into 114 mid-rise units in downtown Salt Lake City Opportunity Zone. They have extensive property management and construction experience, as well as partnering in a variety of deals as private lenders, deal sponsors, syndicators. Emma is also a former real estate photographer. Emma specializes in small business project management. She has a business degree in business administration and entrepreneurial management with certificate in marketing graphic design. Troy, her husband, is the IT guy, keeping the operations running smoothly with the background in data science tech startups. And as key credit partners and owners in several properties, they have experience building teams to creatively get transactions to finish line. Very impressive background, and I'm sure everyone is thrilled to hear the stories that Emma is going to share with us tonight. The usual disclaimer, the presentation is provided for educational and informational purposes only. We're not selling anything, so make decisions at your own risk. The typical housekeeping, please keep yourself on mute until Emma finishes her stories, and then feel free to ask questions unless Emma has suggestions for other format. We'll let her speak in a couple of minutes. Our next event is on July 14th, and we're going to have Ryan Deigel go through the real world underwriting by using the famous, or I guess the most common, Michael Bond's analyzer, the software development analyzer. That's our next event. And again, this is my information. If anyone still does not know how to contact me, the easiest is, I guess, LinkedIn, or one of our websites, Summer Financial or tempofunding.com. That is all that I have for tonight. And Emma, you have the floor. We welcome you to our meetup.
Thanks for having me. I'm actually relieved that you invited me to talk on this topic because it's something that I've brought up a couple of times as suggestions for podcast interviews or other meetups, and people don't want to talk about it. And so I feel like as operators who are trying to raise capital, we don't want to put it into people's heads that they might get scammed. We don't want to put it into their heads that their money is essentially at risk. And I disagree with that. I feel like the more informed people are, the more comfortable they're going to feel investing, and the more we learn, the less risk we take. So, for example, if you asked me to go and perform surgery, I'd just be standing there with a bunch of sharp things, and I would kill the person who was underneath me. And it would be a highly risky surgery, and nobody would undertake that. But if I had training and I had experience and I had mentors and I had helpers in there with me, it would be what might be considered a very smooth operation and very low risk. So when they come and tell you, like, oh, it's a very low risk surgery, I mean, is that even a thing? Do those words even go together? But under the hands of somebody who's skilled and knowledgeable, it's something that could be dangerous and deadly becomes something that can save lives. And so the more knowledge you have, the less risk you're going to take. So I just wanted to go through and share a couple of stories of experiences that we've had during our lives, starting from when we were children and our parents, all the way up to today and some of the things we're looking at. So, and it's not just protecting ourselves from being victims of scams. We also, as real estate operators, can sometimes commit scams, either unwittingly because we don't know what the rules are, or because we get ourselves into trouble and tell ourselves all sorts of stories and mental gymnastics in our heads to justify what we're doing, and when it actually may even be illegal. And so, no real estate deal, no amount of money is worth committing a crime and going to jail. It could be the punishment could be just you're no longer allowed to raise money because you have an SEC violation. Nobody will do business with you. It could be fines. It could be indictments. It could be jail time. So these are some serious consequences of not just people who are intentionally trying to scam us, but also people who are just trying to do business and either don't know the rules or make justifications. And so this is protecting yourselves both ways. The more knowledge again that you have, again, the less likely you are to be either caught up in these as the victim or as the perpetrator. And so where this kind of started for me was when I first moved to Utah about 3 years ago, and I wanted to get involved in real estate investing. I had given up my business in Austin. It was a location based photography business, and so when I moved here, I knew that I needed to basically restart that business, and I didn't want to. It was too much hustle. It didn't make enough money, and I really wanted to figure out how I could work part time and make a full time income, basically, retire my husband, all that good stuff. And so when I started looking into real estate investing, I'd had a couple of experiences in my previous life as a kid and as a young adult that really terrified me about accidentally committing a scam, perpetrating a scam, because I had seen this happen in my life prior to that. And so I spent quite a lot of time when I first came into this, especially a kind of an obsessive amount of research during those first weeks when I was deciding, okay, this is the business I'm going to start, reading up about people who had gone to prison for mortgage fraud, people who've gone to prison for scamming, Ponzi schemes, just all sorts of things that they had done that would make them have to go to jail. And it because it terrified me. And so because of these stories. So I'll just kind of start back at the beginning, and I'll just tell these stories kind of a chronological order, one by one, and how they formed my investing philosophy. And hopefully you can learn something from them that you can maybe avoid making some of the same mistakes. So, and if you want to hop in with a question, it's not necessarily a presentation. I have to be very careful because a lot of this information is confidential. And so I don't really want a presentation up there, no names, no faces, none of this kind of stuff. And so feel free to jump in, but and just make sure we're not asking any specific information that might identify the people that are involved in the stories, because I don't also want to commit anything like libel, slander. I'm just going to share these stories from my experiences and my perspective. So I acknowledge that this is being recorded and that we just want to be careful about the conversations that we're having. So the first thing I can share is when I was a teenager and we had a new family move into our church. And like most good scams, this one started at church. So watch out for the people that you go to church with. They're sometimes the most likely people to commit or perpetrate a scam on you because they have two things. They've established a relationship of trust with you by believing in the same religion and being there every Sunday and seeming like good people. But they've also have an amazing ability to do some mental gymnastics and justify things in their heads because they need to be good people. They need to not be sinners. And so they sometimes have just developed this really amazing ability to do things that the average person shouldn't be able to do in their heads. And so he came in and he spoke to our youth group, and he was a very dynamic speaker, very engaging, very witty, and he was a real estate investor and stock investor and taught courses, sold books, and we were all just really enamored with this guy. And he got to the end of his presentation, and I remember thinking, like, where's the Jesus analogy? Like, that was it? Like, we're here in Sunday school and we're just hearing about his experiences starting his real estate business and investing and all this, and he didn't even bring it back to be like, oh, and here, this is all analogy for some religious doctrinal point that he was trying to make. Like that was it. And I got all done and I was like, that was weird. I mean, the talk was really, really good. I just didn't get to the end part and understand why is he speaking to us as a Sunday school class or as a youth group. Maybe it would have been appropriate for like Wednesday youth night or something, but on Sunday at church, it just seemed kind of odd to me. And so I didn't put much thought into it. We knew them for many years, and a lot of our parents bought the courses and invested and did various activities. And I didn't hear anybody, getting rich and moving out to go buy the big house on the hill. I didn't think about it very much. His kids and I were not really friendly. They were different ages. And anyway, so I ended up moving out of the house and getting a job just after high school. And a lot of my friends ended up working for this individual, working the phones, selling products. I was one of the only people in my friend group who didn't work for this guy, at least at one point during my young teenage career. And a couple of years later, it came up. My mom said, "Hey, did you know so and so and his wife are in prison?" I was like, "What?" I said, "What happened?" And I have had to go back and research this from the news articles and things on the internet, because basically what had happened is that in an attempt to make it look like they were making more money than they actually were to justify their guru education business, they engaged in accounting fraud. And he and his wife, I believe, were both sentenced to 5 years in prison. And they had young adult children at the time. I don't think they had any minors still living at home. And I just remember thinking, what on earth were they doing or selling or teaching that was worth going to jail for 5 years? And I asked her, I said, well, a lot of you, my parents never did, because my parents were cheapskates. They would never buy a program. But a lot of their friends and a lot of our friends did. And my mom said, well, maybe some of them made some money and some of them lost some money. And basically they ended up either not doing it or just never really, it just breaking even. And I thought, well, and nobody really even got rich and changed their lives or anything, and now they're in jail. We hope they peddled a lot of great books. So that was kind of the first lesson to me. Again, like what happens when you put someone up on a pedestal? What happens when you believe that somebody knows something more than you, that have secrets that they're going to share with you and sell to you? And usually what it boils down to is like any good coach. Imagine yourself on a sports team and you've got a coach out there. And what is your coach telling you? Is he giving you the secrets of football? I mean, does he have some kind of secret that's going to make you go out and win against the other team? Or is he just giving you little hints, tips, and how to have an edge in the competition? There's no secret. He might be yelling at you to run harder, to get in shape, and to give you the motivation that you need and the mindset that you need, that you know that you can win. And great coaches are definitely worth their weight in gold. But at the same time, when you watching out, this is one big sign. If you believe that somebody has information that's a secret and that you can only get if you pay them, especially now in this digital age, everything's for free on the internet. And really what you're looking for from a good coach or a good guru or an educational program that you're going to purchase, there are two big warning flags. If it's extremely expensive, $30,000, $20,000, really vet that out. Talk to people who have done it. There's nothing that they're going to be able to teach you or show you that's going to save you from the work. Imagine that football coach again, you're running up and down the field. You have to put in the hours, you have to put in the time. You have to be catching the ball, throwing the ball. There's a ton of practice and a ton of work on your part. Your coach can hone that and direct it, but he cannot do it for you, and he cannot give you secrets. So anything that promises that or even uses the word secrets is a big turnoff to me. The other thing you have to watch out for if the program is free, because then they're usually trying to sell you something. You're going to get in there, everybody's going to rush to the back of the room, and those scams, we all see through those. I wouldn't call those scams necessarily. Those are more hustles. But usually if it's very low priced, they have a very low price offer, like $45 and buy my free ebook. They're usually going to have a high ticket offer. So just be prepared for that. I'm not even saying that high ticket offers are bad, but when I am going to go buy something, I sit down with the creator, call them, email, whatever. I say, I want to know everything that you sell, your entire catalog. And if it's a $20,000 penultimate and then a $50,000 final, like I want to know, tell me right now. And they tell me. And then I know if I'm going to go into this kind of education, is there going to be a $10,000 course and a $7,000 course and then the 3-day retreat and more and more and more and more and more. Just be aware that that's a thing. And it's usually the hook is either some sort of a free seminar, free product, or very a low cost, ebook or something that has followed by the high ticket item. So those are the two red flags: super cheap or super expensive. I think most of the things I tend to actually buy are probably in like the $1,000 range, $2,000 range, something like that. And I know they have higher ticket coaching and one-on-one things, and I'm not saying those things are not useful. Think of that more as a percentage of your income. So if you're going to make $10,000 on a flip or a wholesale, maybe you should set aside $1,000 or so to go get some education. And think about more as a factor of a reward for being self-taught, consuming free content, going to some of the more affordable things that they do, like maybe a conference, those kinds of things, and avoid jumping into the high ticket item, because oftentimes there will be scams buried in there and hustles buried in there. We had one here in Utah recently, about two years ago, right after we moved here, where basically their salespeople were making assertions that ended up being untrue. They had an SEC violation and they got shut down, went out of business, everybody lost their job. And it wasn't necessarily because the people at the top were telling them to say these things, but what you talk about your sales meeting, they get all pumped up and then they're going to say things that just are really distorting the truth. And then there was another organization here in Utah that when that happened, they were a little shaken by it, and they really clamped down on what their salespeople were saying and just making sure that, and it did diminish their ability to go out and sell the product, because there were so many rules about what they could say, because the SEC is breathing down their neck. So just be really careful about these types of programs. And I know that the way I'm describing it sounds like, oh yeah, you're just going to see through this. But how many of you, just raise your hand, have thought about buying a high ticket product, and you've looked into it and you've asked questions and you've looked around, and how many of you actually bought one? I bought one. And just think to yourself, like, what made you decide that? It's just like any good coach. You got to interview them. You got to get references. You got to consume all the free content and just really get to know that person. And if there's a good jive, and never, ever, ever believe that they're going to rocket you to success, give you any kinds of shortcuts. Think of them more like your football coach. They're going to demand a lot of work from you. And if you're willing to put it in, they can refine and hone and optimize what you're doing, but they're certainly not going to be able to give you any huge boost over what you could do on your own. Sometimes like, let's say you're a bodybuilder, and it comes down to like little details. What are you putting into your mouth? And are you lifting this much weight versus that much weight? Because you're going to go from just being an average fit person into like a performance mode where you're into a competition. That often does come down to the little tiny details. And that's really where a coach can be useful in what we're doing. You're doing the gross work on your own, and then the fine tuning would really be something that a coach could take you to the next level. So think of it more in those terms. And like I said, stop me if you have any questions. Then we had an experience happen to us, was before we started investing in real estate. We were a young married couple, and my husband's, a family member of ours, extended family, we met him, and he was telling us all about this great investment that he was involved in. And he graduated from the Wharton School of Business, pretty reputable school. I didn't even have a degree. I think I had an associate's degree at that point. Really didn't know anything about this stuff, but I'd always wanted to invest. I think one of my formative parts of my life was when my mom told me, I didn't know my grandparents growing up, and she said, I said, how are they living? How are they retired? And she said, oh, well, he made like $1 million in the stock market. And I was just really kind of hit me like a dude. My grandpa became a self-made millionaire by investing in the stock market. So that really drove me for years to come after that I had this desire to retire on my passive investing income. And I used to talk about it all the time in college. And so I was really anxious to get into this game, but I never really did. I didn't know how. And so that makes you very prone to being scammed, because you want something and you're looking for something and you don't know, and somebody comes along and suddenly you're like, oh, this is my entry into this investing. So he was sitting there telling us about how great this was, and asked him, I said, well, what is he investing in? That's the question. It's a very important question. What is he investing in? And the answer that this Wharton graduate gave me was, he invests in businesses and things. So I just thought, well, okay, so it must be pretty high risk if he's promising these kinds of returns. And so if it's high risk, I kind of I invest in it, and I put in $10,000, $20,000, and 6 months later, I got back like double my money or something. So super high risk, and vague investment targets. So he invests in businesses and things and buys and sells. Like, okay, show me the business, show me the prospectus, show me the pro forma, show me the business plan. What kinds of marketing materials does he have? Like, what kind of anything does this dude have? And so he gave me a website, some information, and I went home and I listened to the stuff. And then I started Googling the guy, like his name. And sure enough, he'd fled to Canada because he was under an SEC investigation. And I was listening to him interview, and he was talking about how the SEC is on a witch hunt and these types of things. I'm like, these are just massive red flags going up all over the place. But I did respect this family member and his background, his education, his success. And so I continued to do more due diligence rather than just throwing up my hands and walking away at that point. So then I decided to set up an account, and I was going to throw just a little tiny bit of money at it, like $50 or $100 or something tiny. And I couldn't set it up. It just kept rejecting my account. So I reached out to this individual, and he said, oh, well, you can't use a Gmail. You're going to have to go to this email server and get a new email address. And it was some kind of no-name server that I'd never heard of. I'm like, oh, because Gmail's on to you and has flagged you. And that was, for me, that was the red flag. Like, I'm done with this. If Google, and at this point, Google wasn't even a huge company, but if Google had flagged them as something that they didn't want their emails being used to sign up, and I couldn't get an email from them to my Gmail account, that was a massive red flag. It just had a couple little things that added up, and I was like, I'm out. So fast forward 6 to 12 months, and we get an email from this family member, and it was a group email to a bunch of different people, and basically an apology. I apologize to anybody that I recommended this investment to. It ended up being a Ponzi scheme. I've ended up overall, the last $10,000 that I put in has never been returned. And I should have been able to catch it. And I'm sorry if I led you down if you invested in this bad recommendation. And I felt, and then that's very embarrassing for him, as well as losing that money. And on top of it all, I really felt like when I was coming to him with my concerns, that they were all being waved away. He really wanted to believe that these were high returns, and he really wanted to believe that he found something. So that's another red flag. If you don't know exactly what's going on, but you're going to have everything is going to be confirmation bias to you, like, oh yeah, the SEC is totally on a witch hunt. I'm just going to go get this other email from this other server. Those things should add up to be red flags. And here I was, I didn't graduate from the Wharton School of Business. And this extended family member and I have never had any other further communications, not because we disowned each other. We just, it's kind of distant. We just don't know each other that well. So we've never really had a chance to sit down and have a conversation. This is maybe 20 years ago. And so those experiences really did help me out and recognize, like, okay, yes, I avoided that. Like, good for me, right? Fast forward another couple of years, and another dude at church, and this one I can talk about publicly because it's all public record. It was a guy at church, and I was his kid's like Cub Scout leader or Sunday school teacher or something. I knew his wife, I knew all his kids, or we weren't like hanging out at backyard barbecues. Our kids weren't playing together, who didn't live that close to each other, but we knew each other, and talked fairly often. And then in that particular congregation, we lived in an area, I don't really know why, but we saw a lot of real estate investors. One guy, he had maybe 100 single family properties in a property management company. A bunch of them were retired on their real estate investments. And we're doing some pretty interesting things in the space. And so I didn't really know I wanted to get into real estate at that point, but I knew that I had some pretty high level investors surrounding me, and lots of good information and just lots of financial savvy, right? Okay, so just bear that in mind. You are not immune to being scammed just because you have been successful in your investments in the past. In fact, sometimes it makes you more prone to it because you're meeting other people who are successful and you tend to believe that they're doing something right and you want to invest with them. So enter the dude from church. And people start asking, oh, are you investing with so-and-so? I put $10,000 with him, and then 5 months later, I got back $20,000. I wish I had $50,000 to put with him so I could get more back. And I'm starting to hear whispers from all these people in my community that they're investing, and that they're all making this money. And this previous Ponzi scheme just kind of like a little bit started going off in my head, because I was saying, like, well, what does he invest in? And they're like, in businesses and things. It's basically the same vague response. And I think what really saved us from from getting involved in this one is that at that point we were saving up a lot of cash to be able to purchase our next home. And we really wanted to buy like a fixer upper that we could put a lot of cash. So we were having all this cash because we knew we had to fix it up on our own dime, because we didn't know about hard money and all that back then. So I was really trying to protect this, but I thought maybe I could throw it in there for like 6 months and it'll come back as 100 grand. It could come back as 150 or 200 grand. But I knew that that was the only egg that I had. I basically had all this cash, and I certainly wasn't going to put all my cash into one basket. And then I was like, okay, it must be kind of high risk because these kinds of returns don't come from just basic vanilla types of investing. And nobody could tell me what it was that he was doing. I never had a direct conversation with him face to face about investing with him. I just kept it personal, about the kids and things like that. I never went to his office and sat down and said, okay, let's invest together. It was just the same kind of red flags going off in my head. And mostly just because I was cheap. It just felt like I didn't want to risk it. I had this cash in my bank and I was just being cheap. And so 2 or 3 years goes by, and suddenly, the rumors start all around church. Did you hear about Kevin? Kevin got arrested. Kevin got arrested. Kevin got arrested. Like, what is going on? Basically, he was supposed to be buying some sort of a company. It was an insurance company, and he never bought the company because some of the other investments, it started out as legit investments in businesses and things. And some things started to go bad. And so he took all the money that he was going to use to buy this insurance company and ended up paying back the investors. And that's the first moment that it became a Ponzi scheme. When you take money that people have invested, now you can do this if they've loaned you money, you can use loans to pay back whatever you need, but you cannot do this with investments. Investments have to go to invest in the actual thing that is going to generate the returns. And so the minute you take equity to pay back previous equity, it's a Ponzi scheme. And I guarantee you, here we are years later after the scam, he still says he did nothing wrong. He had investments go bad, and he feels bad for all of his investors that put their hard-earned money and trusted him to invest it. Cannot admit that what he did was wrong, to the tune of $30-50 million that he stole, and still cannot admit what he did was wrong. He got arrested. He was tried. He stole so much money, he could have gotten life in prison. It ended up being the largest Ponzi scheme in, I think, Texas history. And he was sentenced to 17 years in federal prison and absolutely will not take responsibility for what he's done. And in the newspaper articles that we were reading about, it named people. One person in particular had lost $800,000 with him. Another one of my friends, her husband was killed in a motorcycle accident. She was not wealthy. She got $1 million insurance payout. And she put the entire $1 million with him because everybody at church said, oh, you can do wonderful things with your money. She lost $1 million. So I called up the guy who lost $800,000. He's a math tutor. And I said, tell me about this. And he said, don't ever invest what you can't afford to lose. And that's when I learned math tutor guy had a lot more money because that was his first thing. He could afford to lose $800,000 and say, don't invest what you can't afford to lose. And he said, it's been a huge forgiveness process for me. I've had a lot that I've had to go through to get over this. I said, will you ever invest again? He said, I certainly will, but I learned a lot from it. I invested in a tech startup company a couple of years ago, and when I got the subscription packet in, his name was at the top of the list. And so I knew that he had recovered and he was able to invest again, mentally and emotionally recover from that. But that's one of the most difficult things to do after you are a victim to a scam, is you tend to do a lot of berating yourself and how stupid could you be to get involved in this. Remember, it's like a girl who's sexually assaulted and is regretting that she wore a short skirt and got a little tipsy. It is not her fault that happened to her. It is not our fault if people are defrauding us, whether they're doing it purposely or unwittingly. Like my friend who really, I don't know how much he believes that he didn't do anything wrong, but he keeps asserting that. It is not your fault if you get scammed, and you cannot let that experience color the rest of your investing. So fast forward another couple of years, and we had taken a large amount of cash and invested it. We got to the point where we just moved to Utah and we were investing with real estate investors in their flipping funds and things like this. And I had some cash, a smaller amount. I said, you know what? I'm going to go do something really risky with this and do something super high return, because I have all of this over here kind of doing their safe little hard money fund type of thing. And I'm going to take this chunk and I'm going to do something crazy just as an experiment. And I got involved with a guy that I gave a loan to his business. And it was coming back at like some kind of like 24% return or something crazy high like that for a loan. And I was like, oh, this is making me pretty uncomfortable. These high returns seem too good to be true. But I did ask him a ton of questions about exactly what does your business do. He had specific information to share with me. So I was satisfied with that. I knew I was not investing something I could not afford to lose. If I lost that money, we would still be okay. And then he sent me all the paperwork and documents. I checked him on the SEC website. He did not have any violations. He was a popular speaker on the entrepreneurial circuit. I called some people that I knew who spoke with him on stage, and they said, well, we've never done a business with him. We can't recommend him that way. But, I've had lots of conversations with him. He definitely knows what he's talking about. So I had done about as much due diligence as I felt I could do without hiring like a private investigator or something like that. And I went ahead and tossed this money at him. And to this day, it took it when it came up at a year, he did not pay it back. I had to start harassing, start phone calling, getting attorneys involved. It took me a year of harassing him. He finally agreed to, it's a confidential settlement, so I can't give too many details, to pay out a settlement to me and in installments. And we were able to come to an agreement, and I didn't have to go to court. But during that period of time, he had court cases come up. So instead of just searching his name, like I did before, I was searching things like his name and company name and putting after it criticism or scam or, violations, court cases, things like that. So, and then I put my attorney on it. I said, I need you to put your PI on this and figure out how to get my money back, and came up with a couple of court cases. So I reached out to his attorney, and they were like settling these court cases. And I said, I have no problem taking you to court. I'm not going to go away, and we're going to get this taken care of, or I'm just going to be like the fly that never leaves you alone. It was enough money that I was motivated to go after it. And it was going to be a long time before I got over losing that kind of money. So I ended up being, having restitution, but I did learn a lot about if this was indeed a Ponzi scheme and he was taking other people's monies to pay me back, then I would be liable subject to what's called a clawback suit. And there should be a statute of limitations on that. If you're the last investor to lose your money and you don't get it back, but say I was in the early stages of the Ponzi scheme and I did get paid back plus a return, all of those returns are subject to this clawback suit that you might file if you lost your money and you didn't get your original capital back. So they can claw back my returns to pay back your original capital. So I just made sure that I kept that money fairly liquid, just in case there was a clawback suit brought until the statute expired. And then I knew, okay, we're out in the clear. So just if you are a victim of a scam, you can report it. But if you think that it might be a scam, but you were made whole and you just didn't reinvest, it could still be a Ponzi scheme, and you could still lose those returns based in some sort of a lawsuit if there's an investigation. So that's really important to know if you think you've been involved with somebody a little shady, even if you didn't lose money. So that was one of the most recent experiences that we had with just how to protect ourselves from the situation. And so I just started doing a lot more research. If people had ever been to prison, there was a CPA, I guess, a local CPA who wanted to come and speak at my meetup and knew what he was talking about. It was great stuff. So, I look him up. Sure enough, he'd served 5 years in prison for mortgage fraud. Basically, I think he was taking properties and selling them to his LLC at a higher price and then getting a mortgage to cash out like a scammy kind of a burr situation. And so you just got to look people up. You got to make sure you know exactly what they're investing in. You got to make sure that you're not just looking up the person, that you're looking up scam, fraud, these kinds of keywords. You can be doing a background check by checking their SEC. You can hire somebody, get their information, run a background check just like you would run on your tenant, like a credit check, criminal history, and they'll need to give you like their birthday and social security number. If they won't give it to you, well, that's a big old red flag that they don't want you looking into them. If you're willing to go pay your $49.99 fee to check them out and they won't even give you the information you need to do it, then I wouldn't invest with that person. And so there are a lot of things that you can do to kind of protect yourself. But at the end of the day, you have to remember that if you do your due diligence and you still end up getting scammed, you could be subject to a clawback. And you do need to get to the point where you can just give them credit for scamming you. If you do this due diligence and they scam you and you lose money, it is not your fault. You are not stupid. You did your due diligence. He was just better than you. He outplayed you. He outmaneuvered you. You fell prey to somebody who was smarter than you are. And you cannot let that experience make you afraid to ever invest with anybody again, because you might get burned again. Because if somebody did that good of a job, that you did all your due diligence and you still got scammed, then that is the exception. That person is exceptional. It's exceptional, like Moriarty with Sherlock. You have to be able to get inside of your own head, forgive yourself, forgive humankind, and be able to go out and invest with confidence in all of the many things you can invest in that are not scams, that are not hustles, and that are giving you honest returns. And so that's what we basically learned from our experiences with shady operators, shady people. And I'll share you one more story. It's not somebody that I knew, but it was a case study that we had to do in business school. And here's the one thing I really want to end up in, which was the most poignant experience. There was a woman who was an accountant for a small family furniture store, like a mom and pop. They're pretty successful. And she went on a ski vacation, actually here in Utah. And when she went to go pay for her chalet or her rentals or whatever, turns out she'd forgotten her wallet. She forgot her credit card, but she had the company credit card with her. And so she put the trip on the company credit card, saying, I'll pay it back when I get home. I'll just make sure I'm the accountant. She got home. She never got around to it. And the next time that she wanted to buy something, she put it on the company credit card. Again, I'll pay it back. I'll pay it back. She did this several times until it got to the point where she started doing some crazy amounts of mental gymnastics to justify what she was doing. And so for 3 years, she was buying what she wanted and putting it on the company card. And I'll pay it back. I'll pay it back. I'll pay it back. Right. And she says, like, looking back at what I did in my head to make this okay is shocking, an astounding ability of self-denial, having no self-awareness. And basically what happened is one day it hit her when she was looking at how much she owed, and it was $800,000. She's like, how on earth have I embezzled $800,000 in 3 years? What did I even buy? Trips, furniture, whatever, right? And so she went to the owners of the furniture store and she said, I have to confess, like, I have been really in denial and fooling myself of what's going on, but I owe you $800,000 in money that I've embezzled over the last 3 years. And they were very upset. And they said, this is a family business and you are like a daughter to us, but we cannot let this go. You have committed a crime and we have to report it. So she was reported. She confessed to everything, opened up the book. She was very worked with the investigators, and she was sentenced to 3 years in prison. And while she was in prison, she had a husband and 3 young children. He eventually ended up leaving her because she and he could not reconcile what she had done to their lives, an incredible amount of financial infidelity, and bringing little kids to see their mom in prison and things like. He's just like, you know what, you're not who I thought you were. And they ended up splitting up. And then after she got out of prison, she was no longer able to work in her chosen field, obviously, just like the CPA who wanted to come speak at my meetup. He hires other CPAs. He's running a financial investing and financial planning firm, but he doesn't actually practice because he doesn't have a license. And that's basically what happens. So she's in this situation. She's like, how am I going to survive? My husband has left me. I can't practice. I've got violations, criminal history, prison time. And so what she ended up doing to make money is becoming a public speaker. And she goes around to business schools and accounting students and these types of business oriented, and she tells them her story, and basically a motivational speaker, and she gets paid to appear. And this is how she makes her living. It's not a great living, right? You can only tell the story, so many times before it gets around, right? But really what was most poignant in her presentation was she said, if you think it cannot happen to you, then that is the biggest red flag that you are at risk. It can happen to every single one of us because we have an amazing ability to fool ourselves that what we're doing is okay. If you think it cannot happen to you, you are at higher risk. That is the biggest red flag there is. So it can happen to you. You can perpetrate a scam. You can be a victim of a scam. And you can make up all sorts of stories in your head to justify why what you're doing is okay. But you can also make up stories in your head about why you're a terrible person because you were a victim. Either one of those narratives are false. and can really derail you either in your career or in your investing career. And it's really, really important that you just stay centered, you stay focused, you watch the red flags, and that you keep your mindset straight, and you keep honest with yourself, either if you're kicking yourself or if you're in denial. So I wanted to open it up to questions at that point. It says here, I'm going to just read off the chat.
Emma, thank you so much. This was a very interesting presentation. The fact that you spoke to it instead of using the slides made it a lot more powerful and a lot more relatable. Yeah, there were comments. I didn't see questions yet, but there were a couple of lessons learned that you mentioned, and I kind of want to summarize it for everyone, and feel free to chip in. So first thing you said was don't ever invest what you cannot afford to lose, which is rule number one in investing. Only invest the money that you have specifically allocated for investing. And this is not your emergency fund by no means. And you need to know that you can lose all of your investment. Even if it's an honest operator, you can still lose the money. You don't know. This is not FDIC insured or guaranteed. That's why it's definitely important. And what you said about the red flags, that it sounded too good to be true, then it probably was too good to be true. So this was also a great red flag and a good learning experience as well. Folks, feel free to unmute yourself if you want to ask Emma a question. Feel free to do so.
I'm looking at one here where it says,
yeah, there was something, you're right.
On the other side of the coin, how can operators demonstrate they are a good company? What are the things they can do to ensure their transparency? Well, I love the word that you use, transparency. Be transparent. The more details you can give, the better. It's like someone who's lying, and they'll concoct more vague stories because they can't remember all the details of the lie. And so if they give too many details, they might forget them later or come back and contradict themselves. And so they're intentionally vague. So the more detailed you are, the more honest you're going to appear. Share your screw ups, because nothing is more trust engendering than sharing your screw ups. You don't want to look incompetent when you're sharing these things, because you do need to engender some sort of sense of confidence and competency. But everybody makes mistakes, and you need to be pretty honest about when you've made an error of judgment, trusted the wrong person, or you screwed up on your accounting or whatever. Like, get out in front of that stuff as quickly as possible. Mm-hmm. The other thing is to offer your information for background checks. I had an attorney who wouldn't work with me until I passed a background check. And so you can pull that stuff on yourself and make sure that that's readily available. If you have ever been cited for something, like, for example, we're working with a partner right now who he just came right out and he said, I have been indicted for bribing a public official. And I just want to put that out there, because the second you look me up, that's going to come up. I'm going to tell you my story. I'm going to tell you why it happened, how it happened. And one more story, somebody that actually took one of those high priced classes from, he couldn't raise money because he had an indictment for illegally accepting money, and he got right out in front of that. That was one of the first things I learned about him. And basically what happened is they were taking money into their business account without going through, either having to go through the title company to be secured against the property, or the alternative is to have the SEC paperwork either registered or filed, so that you can take it straight into your business account. People were basically wanting to give him money under the table because they're trying to hide it from my ex-wife and things like that. And he did it twice. The first time he got a warning and a fine. The second time that he and his son both got indicted. It was his dad doing it because his dad owned the investment company, but he knew what was going on. And he knew that his dad was doing it again. And so that's why he was indicted along with his dad. So he got right out in front of that. He does have an SEC violation, and he shared that, but I'm still able to do business with him and trust him because he revealed it to me. I learned his lesson, and I'm able to kind of keep tabs and look him up. And I'm also able to be very, very careful with how much money or trust I put with him, because it's going to take him longer and more time to earn my trust. I would never invest like huge amounts of money with him, and he can't accept it anyway, because so his investing is more like wholesaling and things like that, because he can't be raising money to do large deals. So he's not ever asking me for money. So that's one way that you can be transparent. Put the financials out there, have a very clear business plan. Like you're not going to invest in businesses and things or multifamily or whatever. We're investing at this property, at this address. Here are the photos, here are the comps. Like that gives people a lot of confidence. And so at that point, you know, they're not being scammed because you have a specific business plan. There's an actual property that you have the proper attorneys, having your PPMs and all that kind of stuff done. At that point, you're really just trying to convince them that you're not incompetent. And that's different. That's a different conversation. If they're afraid you're going to scam them and they seem kind of scared that way when I'm talking to them, I'd be like, you know what? You're not ready for this. You're not emotionally prepared to take this on. I have conversations with them about how to diversify their holdings. So if they tell me they have $700,000 that they want to invest, I'm like, maybe you should take 50 grand and put it in, you know, 5 different deals, maybe with a couple different operators. And then once we build a relationship, you might want to start throwing maybe 100 or 200 grand, you know, per deal, but certainly be diversified across operators, across asset types and classes. And just having that conversation, you don't want all their money. You don't want all their nest egg. You want them to get a feel for your relationship. And the most you're ever going to get, unless they want to throw you $1 million, I'm sure you take it if you had a good relationship. But if somebody came to me as a first deal, I won't throw $1 million at you. I'd be like, I don't feel comfortable with that. That's how you engendered trust. I actually don't feel comfortable with that. So I mean, I can tell the truth and say that's probably a bad plan. You cannot give them financial advice. So make sure that you don't say, oh, you know, you should do this, you should that. Say, if I had $700,000, here's what I would do with it. So just be careful about the way that you talk to people that way. Anyway, that's that question.
Thank you.
Excellent. I don't see any more questions. Guys, feel free to unmute and ask Emma more questions.
Hi, Emma. Matt. I had a question regarding, it seems like a good kind of shield of defense for both syndicators and investors would be like that securities attorney. So do you have any recommendations on how to kind of find the right securities attorney for you and like what criteria you would use, kind of vet that person out, make sure they're a good fit and they're kind of a qualified person to deal with versus maybe not as quality of an attorney?
Well, I think with attorneys, you're going to have the same rule with property managers, accountants, and contractors. How do you find a good one? You know, hire 5 bad ones. So you really have to just try them on for fit. Now, you're going to sit down, you're going to interview them, have a phone call. If they're going to charge you hourly to interview them or to basically see if you want to hire them, that's a good red flag. I've had people at the end of an interview say like, you know, I charge $400 an hour or whatever, and they want my billing information. I'm like, dude, you crazy. Like, I'm seeing if I want to hire you, and that's a big no-no right there. So if they start talking about that kind of stuff, I do want somebody who's very professional and organized and has easy ways to pay them. So for example, I want a written invoice before any work commences. If they send you a commitment letter or some sort of an engagement that you need to sign, I like them to be professional with their paperwork, because if they don't send me an engagement letter, then how do I know they're good at paperwork with other legal stuff? I mean, that's just a basic, right? Little things like that. You're going to ask people for recommendations. You're going to toss them a couple of maybe small projects. So for example, I recently started an investment club, a free investment club, where I want people to come in and pool their capital, but we don't want any limited partners, because most people I know don't want to be limited partners. They want to be active general partners, but they're maybe struggling to get their first deal, or they're not sure if this is a good fit for them. And so I called up a new securities attorney that I had not worked with before, and just paid him for a consultation to say, hey, I'm starting this thing where we want to pool our money, but I need to make sure it's not a security and that we're not violating any SEC regulations. And he said, well, okay, you know, and did the thing. And then he went and did some research and came back to me and put me on the phone with his partner a couple of days later. And we discussed it, like what kind of documents I would need. And, you know, you pay him for that. And he was able to show me through that. Is he prompt? Does he have a good memory? Does he know who I am? Is he organized? Did he get back to me when he said he was going to get back to me? Did he bring me documents that were reasonable versus trying to sell me every expensive documentation that he could? And so, you know, that's a couple $100. And he actually did the job that I needed him to do. He gave me some really great information, and I was able to just kind of try him on for size. So those are the ways that I find attorneys. And one other big thing that I do not all attorneys will agree to this, but I make them bid just like a contractor before any work commences. If I need LLCs created, I need this one to do this, we need an operating agreement and all that. He actually sends me an invoice before he starts working that line items out what he's going to do, how much it's going to cost, and all change orders have to be approved before further work commences. I don't like attorneys who call me up on the phone, talk for 30 minutes, and then I get a bill in 15-minute increments. And so we have that conversation. How are phone calls billed? If we're on a phone call, I need you to specify this is being billed versus we're just chatting about investing. So that's a big one for me. I do not like getting surprise bills from attorney. I do like flat fee attorneys. It's important to find somebody who's not too conservative, who's not too cowboy. So maybe hire them for a small job. And if you're doing a deal with a partner, usually if they say, hey, I used this guy for my last one, we're going to use him again. That's awesome because they've already worked with them. And now you get a chance to work with them on maybe a large project and see how you like them. So if you partner with different people, you'll get exposed to different attorneys and you'll get more of a sense of how you're working together. And I would say a lot of the things I just said also apply to people that you're going to invest with.
Excellent. Appreciate that.
Great answer. Thank you, Emma. Guys, anyone else for one final question? Emma, if you want to summarize maybe the red flags for people, things that typically stick out to reinforce the point, I think that would be good.
Yeah, you've got all the trite ones that you always hear. Don't invest more than you have to lose. If anybody's asking you to put a lot of money into a deal, like put all the eggs in one basket, and they're not talking about diversity and safety, that's a huge red flag. If they're willing to let you put all of it in to one thing, they're going to take more money than you feel comfortable giving. It's going to give you anxiety. Follow your gut. Like, are you having anxiety over this? If you are, dial back how much you're going to invest until you no longer have anxiety over it. Because if you throw 50 grand at something and you lose it, but you had 500 grand, you know, that's not that bad. But if you're feeling nervous at 50 grand, but that's the minimum, maybe you shouldn't invest until you're feeling better. So check your gut. Make sure that they have a very specific business plan and specific outlines. There's a beginning, a middle, and an end. You know, it's not just, if there's a fund and they're going to keep recycling your money, like how do you get your money back out? A lot of funds will have like a 2-year, you can pull it out, or they'll have something like if there's a capital event, you can pull it out. Like you need to know what all of those are and have clear channels to get your money back out of the investment. If it's not liquid, like a real estate investment, they might say you can get it back in distributions and refinance and it sell. It's not liquid, you can't get it back, but at least they're giving you an honest answer, right? But you should ask. And then the other thing is doing all your background checks, your due diligence, if they have any court cases against open court cases, sealed settlements, certainly those types of things. If they won't give you a background check information or won't encourage you to do a background check, that's another red flag. And I would say for me, the biggest one is the vague business plan. And the too good to be true returns coupled with the vague business plan. That's massive. Those are massive right there.
Excellent. Emma, are you okay if I put your LinkedIn profile, or do you want to just type your contact info?
Yeah, let me put that in there.
Please. While Emma is doing that, I can give you a live example. So as many of you know, I represent TF Management Group, which is a real estate fund management company. So whenever there is an open-ended fund, which we do have, we specify in VPM, in the private placement memorandum, the lock-in period. And as Emma mentioned, the most common term is 2 years, which what we have for our fund. And then the people can request money, and it's up to the manager how much to allow to liquidate. But typically you can liquidate up to 50% of your investment in year 1 and up to another 50% of your investment in year 2. And then for the closed-ended fund, the rule of thumb is when all of the projects are fully liquidated, when they went full cycle, you should be getting all of your money back. Absolutely. That goes for all of the closed-ended funds.
I have one last question if we can squeeze it in. It's quick.
Go ahead, Isaac.
Emma, great presentation. Thank you. You hit on the whole thing of diversity, the story of the church lady with the $800,000. That was a scary one there. I've been in different investor groups and forums. I've seen the debate of it's only a matter of time until you invest in something where that investment's going to go belly up. I wouldn't say a purposeful Ponzi scheme, but I know as a passive investor myself, that's my biggest fear of eventually one of these investments I'm in as my portfolio grows, being the investment that goes kaput. Do you think it's just a matter of time as a passive investor grows the portfolio to 10 sponsors, 20 sponsors, that something is going to come up empty? Or could the investor do enough due diligence, enough vetting that they can avoid that? Because I'm still naive, thinking, okay, I can due diligence myself enough that I'm going to avoid any belly up investments. But people who have a lot more experience seem to think otherwise.
I think it's a little bit fatalistic or maybe defeatist to say it's only a matter of time. That language bothers me a little bit, even though it's true. I think that maybe rephrasing that in your own head a little bit to more of a you win some, you lose some type of mentality might be a little bit more of a healthy way to go into an investment. Don't invest more than you can afford to lose type of thing. One of the little mind tricks that I play with myself when I'm, especially as I'm doing passive investing where I don't really have any control over the outcome, is I need to have $1 million in cash invested at an average of 10% rate of return to throw off $120,000 a year. That's $10,000 a month. That's retirement land, right? And so that average of 10% is where the magic lies, because some deals that I'm going to get involved in are going to have an 18%, 24%. I've got some deals of 30 or 50% returns because they're just really great deals, right? And I've got some deals that are going to lose money. I've got some things that I'm going to get T-bills and municipal bonds and things that are going to be 6 to 8%. But that's not saying I'm going to invest in some things that are above 10 and some things that are below 10. Sometimes I'm going to invest in something that's above 10 and it's not going to perform. And it's going to come in at 8%. And that's still making money. That's not losing money, but that's lowering my average are the things that don't perform. And occasionally I'm going to lose money. Occasionally I'm going to lose all the money that I invested. And that's going to drag the average down too. But as long as I'm focusing on good, strong investments that are going to get me somewhere in that 12 to maybe 30% range, above 30%, I start getting a little wary again, like what's wrong with this thing that the returns are so high, right? But somewhere between that 12 and 30 is where I typically target. And if it comes in, if it's averaging 10% and I've got $1 million, it's 120K a year, I'm happy. I can lose money and still be retired on my passive income if I lose a few, because that's the mindset that I have, is the average that matters, not a deal by deal basis. You will lose money. You will lose money either in your own incompetence, operator incompetence, or scams, or just because not everything works out the way that you want. And when you get your mind wrapped around, I will lose money, it's the average that counts. It's not each individual deal. It's like a baseball player. If he had to get out there and hit a home run every single time, or even a base hit, and he could never strike out, he would be too afraid to get up to the plate.
Amazing. Thank you so much.
Excellent.
Yeah, great answer. Emma, again, I want to thank you so much for the presentation, folks. Emma typed her profile, so feel free to connect with her and reach out if you have any other questions. And hopefully, yeah, and I see Emma typed her email as well. So feel free to reach out to Emma directly. And Emma, again, thank you so much. This was absolutely amazing. Very grateful to you.
Thanks for having me. And like I said, I'm really, really glad that we get to have this conversation, because I think to go back and answer that question before, this is one of the things I like to talk about in order to give myself some credibility, because I'm out there, not in front of my own scam or my own indictment or my own, because I don't have any of that, but to be able to say, this exists, I'm aware of it, I hear your fear, let's talk about that, gives you a tremendous amount of credibility as an operator.
I am with you 100%. In fact, I interviewed one of our investors, and I have that on our YouTube channel in an article. I think that's where you responded when I was posting about that interview, how he was a victim of a Ponzi scheme in the past. And I just wanted him to share his experience and red flags really for other folks to be able to learn from his own mistakes so people would not repeat his mistakes and not get caught in the Ponzi scheme. But it was definitely very unpleasant and something that we would not want anyone to go through again. So
my financial advisor was very helpful to me when I was looking like I was going to lose that money. Like I said, I ended up settling and it ended up being okay. But during that year when I didn't know what was going to happen and felt like, have I been scammed? He was just really helpful to me in keeping my head straight so that I wasn't too afraid to go and invest again. I just call him up. I said, like, what do you do? What do you do when you lose money? What do you do when someone scams you? And I was feeling despondent. And he's talked me through it. We've had several conversations about it. So just, reach out and get your head straight. That's the most important part of what we do. No matter what we're doing, is believing that you can be successful doing this and not letting things get in your way.
excellent advice. Thank you so much, Anna. Good night, everyone. Take